as a serial entrepreneur, I guess I spend most of my time building businesses, you know, if I look back at the career. And so what one could think, you know, what do I know about VCs? I must say that most of these businesses, or a number of them, have been VC-based. So when you have to fight the beast, you should learn about you know, what it eats, and hopefully it's not you. So it started a way back. My first encounter with the VC was in 1986. I was co-founder of a auto-guided vehicle system business, and we got to a point where we needed desperately of some funding. I'm stressing about it desperately because it's I learned a lot by that word, not to talk to VCs when you're desperate. So anyway, it was in 1986, so that's more than 25 years ago. I did what I like to call an alley show, because I really couldn't call it a road show. There were just too many addresses to go to, just a few doors to knock to, and learn many things. And by the way, I got some financing, but not from the VCs. I got some financings, and we're talking about early '87, from angel investors. 6 angel investors that invested in the business. But I want to stress on 2 lessons that I remember from that time, and you know, got me going afterwards. One about the VCs: never be desperate when you call them. So I guess it's easy to say, but when you remember you know, how the VC works, and I had one, by the way, that explained me the whole track of what he was looking for and so on. So I guess in '86, with this guy from NovaCap, I got a pretty good run of what they were looking for, and what a good VC should look like. The second lesson that I gathered, and you're probably going to smile about this, but again, I'm talking about early '87. It was possible to find investors that were greener than me in financing a business. So I had 6 angel investors. You'll see why later on, why I sort of, when I started in the trade of angel investing, I used to use the word jolliness as being a way to describe how a lot of VCs were looking angels later on. So next slide. So that's about what I wanted to say in my intro. Again, a few other pertinent experiences or anecdotes. In 2000, I started a business called M&M. Michel and Michel, my partner is named Michel, and he's operating company, one of the companies we invested in, and I'm taking care of all the others. And the M&M model was VC co-investment from the start. By then, obviously, 20-some odd years as an entrepreneur starting business, dealing with VCs, I think I knew the beast. And I think I could even add that I was admiring the beast. So that's probably why when I sold the companies in 2000 that decided that the experience could be useful, and that not only useful, but lots of fun, because I think that building businesses is fun for a while. So the model, if I summarize my experience, because I don't want to get into details and I don't really have the time, but I would say it worked fairly well, this model. I was investing first. Tickets were pretty high, because don't forget that M&M was into technology, infrastructure, telecom, and or that type of businesses. So capital intensive, or very capital intensive. So it required a ticket to be in and many other tickets to stay in. And I knew the model, like I say, I knew the beast, I knew how it was working, and I knew that business well. So that's why I went into it, even if it was capital intensive, just so be it. But it worked fairly well, I would say, mostly because of two reasons. I knew the business situation and challenges usually better than the VC. And I think I have up here one rule. If you have a VC as a partner, choose one and try to choose it. Not 3 VCs or 2. Or you're in. So usually the model was I'm in and they follow me. And then I follow them more than anything else. But not 2 or 3 of them. So if you keep ahead of the business and knowledge of the business, the VC respects you and feels that you mitigate their risk. The second reason, and I worked hard on that second reason, the founders were usually more reactive to my suggestions than those of the VCs. I meant by that my self-investment. Not only am I chairman of the board, I'm a very involved, even if I don't have the title, I'm the executive chairman of the board. Okay, and not what I always try to do in my businesses, it's at the founders or the entrepreneurs' demand. I'm not forcing that in. They want me to be there. They want me to play that role. And because, in my numerous years of operations, and I can state a few of those anecdotes with my VCs where there were 1 or 2 defining moments in some of the companies that the decision was made. And now that I'm playing around with a lot of, of most of the VCs, private equity and VC or other angel investors in my companies, I have all these as partners. I can see that in some decisions that we're taking in my companies, if I would have had another VC than the one I had, I probably wouldn't have made the corner, because they understood the business enough to be able to comprehend the challenges, comprehend the, how would I say, the bluff, partner's bluff, or customer's bluff, and they were confident enough in us to take our word and understand our explanation. So I felt that that's the model I wanted to take. Even as an angel investor, I knew that in all businesses, there might be one defining moment, and it might be only in 3 years. But it's then that I'm building up all my influence. It's for that moment where I'm going to sit down with the founders, and they're going to see me as one of the founders, not as one with self-interest that is trying to push them on one side. No, business first. Business first. And I think this has been recognized by most of the VCs that I've co-invested with, and probably why I was kept alone, not being pushed aside or whatever, unless the founders were pushed aside. Next one. So the overall experience with VCs, well, I would say positive. But over the years, I guess when you co-invest with a partner, he gets to know you very well. So it happened a few times that I was asked to sit on boards of which I had not founded the company. I had no self-interest in the company. But usually to try to help, when I'm asked to help, it means trying to push the CEO aside or, do things like this, which I don't. I always go to see the CEO first and say, do you want me to sit, do you want me to chair the business? If he says no, it's no from the start. But in many times I was asked to mediate. One situation I just can't stand, especially after my 20 years of operation. Mediate between an investor and a founder, or mediate between an investor and another investor, putting in jeopardy the business because I have to exit. I'm at year number 9 or whatever, and starting to put my own investment in jeopardy because they want to exit. That is sort of probably one of the situations that usually gets my dark side out. I try to keep it as low profile as possible. It's so difficult to grow a business with all the enemies out there that when the enemy is just beside you, it's hard to... so now I've added in my list of experiences a question to ask my partners is, hey, which year are you in? You know, are you in your first 5 years, or you're in your second 5 years? You know, when will I have a problem with you? Well, I don't state it this way, but I think you see what I mean. Okay. Next one. Canadian VC evolution. Well, I just put down a few noticeable changes, in my view, over the last 25 years. Obviously, there's more money. The institutional VCs have matured. Just by the way they represent themselves on boards that they invest in, quite a change. But one thing I want to stress here is in Canada in the last, let's put it 10 years or a bit less than that, there's been a shift towards later stage. In other words, VC practice that we're doing startups are doing round A or even round Bs, not even round As anymore. Some VCs are not called VCs anymore. They're private equity now. Same name, but just the little tag underneath stating private equity. So this has caused, in the last 5 years plus, really a void in seed and startup money. And it makes me think of when this morning there was mentioning about, you know, the Kaufman report. I think yeah, Bill, yeah, that was stressing, you know, different numbers and so on. It made me reflect on the fact that in Canada, the fact that we are smaller is sometimes not necessarily a disadvantage, because when you look at how the dollars are distributed between all the segments of the ecosystem, I think in Canada it has been known for quite a while that you can't rely on the bell curve. You can't rely on forces of the market, because you're going to have some, well, in all ecosystems, here in the US, in Canada, you always have gaps in the ecosystem that you have to fill, to mend, and they change from time to time. You know, when there's going to be too much money in the private equity, you know, it will come back probably at the other end of the ecosystem and put some more money there. It happens like this. But if you're not reactive enough to mend those holes, and one of the holes that I was mentioning about was zero. I mean, we were talking about not being able to get money for seed or startup businesses for quite a while. I mean, that's dramatic if you're looking at the whole pyramid, what's going to happen for the rest, and not even just the development aspects of a country. But there were initiatives by the government. I think Benoit mentioned one. But one of the very positive things about the fact, not only that there was initiatives, you know, to mend this hole as quickly as possible, quicker than what the market would do, and have a permanent hole probably, it gave a boost to the angel networks big time. Because I remember when I started years back, it was like, from jolliness, angel investor as a VC partner, from jolliness to seriousness or professionalism. In 2000, 2001, I realized quickly that I shouldn't use the title angel investor because, well, the smile. Everyone had a smile. All the VCs had smiles. And I can't understand them because remember my experience in '87 where I convinced, I don't want to use the word fool, but I said I convinced angel investors to invest in this auto-guided vehicle system business. Well, things have changed completely now. I think angel investors have been recognized as serious investors that can bring, and one thing that is very well documented, and I was stating that years ago, when people were asking me, are you making a difference, Michel? I said, I can't really tell you right now if I make a positive difference in the sense that I'm going to get higher evaluation and so on and so forth. But one thing I can document, the early death ratio is a lot less. So, and I've learned that taking the hockey analogy, it's only when you're on the ice that you can get goals in. You can have all sort of interpretation when you're standing in the crowd, but it's only when you have the hockey stick. So staying longer on the ice with good entrepreneurs, they'll find a way because they have the will. And when there's a will, there's a way. Good entrepreneurs, and they have some good technology, well, they might have aimed it at the sort of wrong market, untimely market, and if they have a second chance at kicking the can, well, so are they on the ice still or their way? So early death, number of companies that make 5 years and beyond, you might say they survived, they're not making that much money. Because I remember myself, and one of the business that I was sold in 2000 was the best VC deal in Canada for that year. Gave me enough money to start M&M with my private fund. So my point is, I remember those 2 times, October, where my partner and I had the hand on the plug. So sometimes it's that close, you know, that from closing up or having a big success. So time on the ice is very important, and I feel that that's what the angel investor, that self-invest himself. I'm always stressing on the self-investment. It's not the money. Yeah, I can provide a lot of money, but I need to know where the bus is going. And if we don't agree for the next 5 years of where the bus is going, you won't get the first buck of my money. So that was like an unwritten understanding with the entrepreneurs. So some last thoughts, because a number of you have probably heard me a few times talking about the making of hunters. I feel that it's now time to, we're talking about startups and so on, but I'd like to look at the other end of the spectrum, where in technology we are experts on dressing up the bride to sell the company. And it's sort of part of the game, you know, from day one with the VC friends or even us, angels. I know that in some businesses, well, the probability that you might become the dominant in the world is probably not the best area over the time, but I might be wrong. So what I'm saying is that I've been, you know, putting a lot of time and a lot of people have been putting a lot of energy in documenting the fact that there are some issues that hinders us to make more hunters. We have shown that we can have original technology that is best in the world in some areas. I think that we can now think higher ambitions. Can we be dominant in the world instead of having the best technology in the world? Being world dominant in terms of size. And I think this will be a line of thought that John will probably carry on. with OMERS. I'm proud to be part of the advisory committee of OMERS.